All in all, if you look at the trading session, it looks like, it's going to be another quiet start for the Indian markets. But yes, let's take a quick check of how the pre-open rates are looking like. Sensex is down by about 100 points, 180 points down tick that is coming in for Sensex. Nifty is also down by about 26 points. So yes, we are looking like we are headed for a quiet start in a, once again, could be a range-bound session itself, given that, it's also the holiday-ended session itself. But yes, on that note, let's quickly get on board with the technical expert of the show to understand how the trade setup should look like. Joining me is Nilesh Jain of Centrum Broking. Nilesh, good morning and a very happy new year to you. But 2 days of consecutive fall for Nifty and no Santa cheer. So what lies ahead?
Very good morning to you, Lavisha. Happy New Year to you as well and your entire team and all the viewers as well. So looking at the recent surge that we have seen, looks like there could be possibility of some bit of a pause before we see another leg on the upside. Now, as you have rightly pointed out, the volumes will dry up a bit for the day, or maybe next for a couple of trading sessions, we may see some bit of consolidation as well. So as far as levels are concerned for the Nifty, in this week, we have seen a good breakout about 26,000 mark with a gap up opening where we have seen the Nifty crosses 21-day moving average as well. In the coming week, we have monthly of an expiry of Nifty and Bank Nifty. So ahead of that, if you look at the data, 26,000 to 26,200, that's the range as of now for the Nifty. If at all you get any dip in today's trading session, that can be used as a buying opportunity, keeping a stop loss below 26,000 on the closing basis. And we expect a gradual upward to continue towards 26,300 and a new record high can be seen in a very short-term time frame. Coming to Bank Nifty, similarly, Bank Nifty is also witnessing some bit of consolidation. 59,000 is a very important support that needs to be watched out for in today's trading session on the closing basis. If it manages to defend the same, then we can expect a short covering in the coming week towards 59,500 to 59,800. Now, in last couple of trading sessions, we have seen another positive development that's in the broader markets where the Nifty, mid cap and small cap have also started participating in this pullback move that we have seen in the market. Although in the previous session, some bit of profit taking was seen, but looking at the overall setup, we can expect a gradual upward to continue out there as well. Lastly, if you look at the volatility index India VIX, which is trading at a historical lowest level, and that is something that is giving more comfort to the bulls, and that's why we are expecting some bit of rebound going forward.
Okay, all right. Some bit of a rebound can be expected from the broader end of the markets. But yes, Nilesh, it was the metal stocks that has done well in the last session and it has extended gains to about the 6th straight day. What do you expect? Do you expect the rally to extend and anything that you're liking from the space?
Nifty Metal Index, we continue to remain bullish and it looks like we may see a further momentum to continue. The important level to watch out for as far as Nifty Metal Index is concerned, that is placed at 10,800 levels, and exactly that is going to be very important resistance that needs to be taken off. We expect a breakout about that going forward, and from a short to medium term perspective, looks like Nifty Metal Index is heading towards 11,500 to 12,000. So within metal space, Hindustan Copper is going to remain our preferred bet, given the kind of momentum that we have seen in the copper prices, where we have seen a new record high. So Hindustan Copper, this particular counter, which is trading at near all-time high mark. So we expect not at all-time high, but 52-week high. So we expect a follow-up move to continue towards 460 to 500 levels on the upside, keeping a stop loss below 410. Hindustan Copper is a buy. Hindustan Zinc will be another stock that we expect a positive momentum to continue. So on the upside, target would be somewhere around 660 to 700, keeping a stop loss below 585. Any dip, if at all you get, that should be used as a buying opportunity.
Okay, all right. That's the view coming in from the metal basket, and we'll watch whether the metal stocks edge up in today's trading session itself. But apart from that, we have seen that the IT stocks have remained under pressure for the second consecutive day. Nilesh, how are you placed here, and anything that you're liking from the IT basket?
Nifty IT space is forming a high top and high bottom formation. So recent high top has already been in place. So high bottom can take Nifty IT index towards 38,700 to 38,600 on the lower side. But overall, the major structure has already turned bullish. One should use this correction as a buying opportunity in the quality names like, first of all, our preferred bet is SCL Technology. that particular counter is looking attractive at current level given the kind of a consolidation that we have already seen. So this particular counter can be added for a position target of 1750 to 1800, keeping a stop loss below 1635. SCL Tech is a buy. Not only this particular counter, but also if you look at mid cap and small cap, IT names are also doing well. So counters like emphasis, this particular stock can also be added on declines. If at all you get any dip towards 2830, 2800, that's a good entry point. The target on the upside could be 3000 to 3050. And apart from that, if you see Birla Soft, this particular stock is also looking good on the chart for upside target of 475 to 500. Keeping a stop loss below 435, Birla Soft is also a buy. So overall, the IT major stocks are doing well. In fact, the major structure has already turned bullish, so buy and decline should be the strategy.
Okay, buy on decline should be the strategy. All right. Let's also talk about the railways counters because they have been buzzing in trade. And of course, we'll watch out how they behave today, given that the rate rationalization kicks in from today. But yes, coming to you, Nilesh, for railway counters, do you expect the gains to sustain? Because it's, the entire pack has seen quite a tepid year so far.
Right. So railway space, we continue to remain bullish. It looks like a pre-budget rally has already started in PSU stocks, railway stocks, and defense stocks. So these sectors are likely to remain in focus for next month as well. As far as stock-specific move is concerned, Titaga Wagon is something that we are liking at current level. Given the kind of a move that we have seen last 3-4 session across all the railway names, Titaga Wagon on the back of a breakout looks attractive for 880 to 900 kind of target on the upside. Keeping a stop loss below 835, Titaga can be added on declines. Not only that, even if you see counters like Ircon International, where we have seen a good momentum, so this particular count is also looking positive for 185 to 200 kind of levels on the upside. 160 should be the stop loss. But looking at the recent momentum that we have seen in last 3-4 session, almost all the counters have moved in the range of 10 to 20%. So after that kind of a spurt that we have already seen, the risk and reward is not looking favorable at present. So better to wait for some bit of meaningful correction that will give a better risk and reward. Then probably these are the stocks that can be added. And lastly, one more name, that's RVNL. So this particular country is also looking positive for 360 to 365 on the upside. So keeping a stop loss below 330, RVNL is also can be added on the portfolio.
Okay, all right. RVNL also something that you are bullish on. All right, let's move on and talk about the shares of Coforge. After that, we have spoken about IT stocks itself. But Nilesh, I mean, today the company is going to hold a board meeting for to mull the fundraise. And if you look at the stock has declined in the past 2 sessions. What can we expect ahead?
No doubt we have seen a sharp decline in 2 sessions. And looks like there could be possibility of some bit of consolidation before we see any uptick in this particular stock. There could be possibility of some bit of a pullback move, but not looking attractive at current level given the kind of structural breakdown that we have already seen. I would rather wait for a break above 1800. That will give more comfort because 1800 is the strike where we have seen huge amount of call writing. So watch out for a breakout over 1800. Then only it can be bought for a pullback move towards 1850 to 1900. But as of now, it's an avoid. If somebody is already holding the long position, can keep a stop loss below 1700 for the long positions.
Okay, all right. We'll watch out for Coforge shares also, how they behave today. But yes, the first trades that's coming on your screen, if you look at the Nifty, it looks like a very flattish start for the markets, given that we did expect that both the headline indices are expected to be quiet in today's trading session. If you look at Sensex, it's down by about 90 points, 0.1% decline that is coming in for the benchmark index as well. But yes, from the mid cap and small cap index, you can look at mid cap index, which is opened with about flat but with a negative bias. But yes, the small caps have been bucking the trend because they have opened marginally higher with about 0.1% gains. But yes, let's take a quick check of how the sectoral movers are panning out in the first minutes of the trading session. Nifty Auto Index flat with a positive bias. Nifty Metal Index once again doing well, up for the 7th consecutive session. Pharma Index is also opened in the green. And what has not done well, that is your IT stocks, because they remain under pressure. Nifty IT seeing a decline of about 0.1%. Nifty Realty also, after days of recovery, today once again it is succumbing to some selling pressure, seeing a decline of about 0.1%. But But yes, all in all, we can see that the majority of the sectors have been trading with some negative bias. But yes, it looks like a quiet session as of now, but we'll watch out how the rates settle in going forward. But yes, let's take a check of the breadth of the markets, because that looks like it is favoring the declines in the first minutes. But yes, let's move on and talk about the top gainers and losers on the Nifty 50. If you look at Hindalco is topping the list with about 0.3% gains. Dr. Reddy's Lab is also doing well with about 0.2% gains coming in from there itself. Trent is also doing well in this market. Apollo Hospitals holding up well. Bharat Electronics also seeing a gain of about a percent itself. Power Grid, ICICI Bank, Cipla doing well with about 0.1% gains. Coal India once again holding up well. Titan also doing well with about 0.2%. However, on the flip side, what looks like you're seeing a little bit of a selling pressure, that is your Eternal, seeing a decline of about a percent. Bajaj Finance also losing in the trade, one of the top Nifty laggards. SBI Life, HDFC Life, both the life insurance players have been seeing a bit of a setback with about 0.5% cut itself. Tata Steel, Asian Paints also seeing a decline of about 0.3%. But yes, Coal India once again soaring in the trade, one of the top Nifty gainers. And we have seen that so far this month, Coal India has given out quite a bit of a positive return. But yes, coming to you, Nilesh, Coal India, quite a bit of a recovery after the kind of struggle they have seen this year. This month has been quite good for them. What can we expect next for this particular counter?
Right, Lavisha. So we have already seen a good start in this particular counter as far as this week is concerned. And after long consolidation, if you pull up last 1 year chart, you can clearly see there has been a 1 year long consolidation. Finally, the counter has given a fresh breakout from the levels of 390. So given this kind of a breakout, I think it's a good bet to add in the portfolio at current level as well. We expect a move of close to 420 to 445 on the upside. So keeping a stop loss below 375, Coal India is a buy, but it's a positional buy rather than a trading bet. And on the upside, as mentioned, immediate target could be somewhere around 420 to 425, but positional target comes somewhere around 450 to 470.
Okay, all right. That's the view for Coal India. Today also the stock has been showing a bit of a positive movement. But yes, let's talk about Interglobe Aviation. The stock is down today, but the company did say that it has fully stabilized its operations and is prepared to handle the expected surge which occurs during the ongoing holiday season. Nilesh, what's your view? I mean, the stock, however, is showing a bit of a positive movement, flat with a positive bias. But so far this month, the stock has already seen about 14% fall due to the disruption news. Do you think the recovery mode could be on from here on?
All right, Lavisha. So we have already seen a sharp correction in this month in this particular counter. But after that correction, counter has stabilized and we have seen a gradual recovery that has already started. So the recent low that this particular counter has formed somewhere around 4,645. So that seems to be a short-term bottom for this particular counter. We may not see a V-shaped recovery, but yes, a gradual up move is something that we can expect going forward. And upside may extend towards 5,300 to 5,500. It is important to reclaim this long-term 200-day moving average that is placed at 5,500. So if that has been taken off on the upside, then probably we can expect a follow-up move to continue on the upside towards 6,000 as well. But yes, if somebody is already holding the long position, can continue to remain long in this particular stock, keeping a stop loss below 4,800. And the short-term structure looks like has turned positive for a pullback move to continue.
All right, 200 DMA is the one part that needs to be reclaimed as of now for Interglobe Aviation. That is something that we'll be watching out for. 5,500, that is the level for Indigo as of now. But yes, let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Samir, he's asking about BSC as a stock, and he's asking whether the stock is advisable for a fresh investment at the current levels. Nilesh, what's your take? I mean, the stock, however, today seeing a little bit of a setback, 2% decline that is coming in.
Lavisha, you are talking about Bombay Stock Exchange, BSE?
Yeah. BSE as a stock, yeah.
Right. So BSE, if you look at this particular stock, we have seen some bit of consolidation, and the counter has hit highs in the month of June. So that was a new record high near about 3,000 odd levels, and soon after that, we have seen a sharp decline. But as of now, looks better placed. If somebody is looking for a positional upside in this particular counter, then I believe it has a potential to test 3,000 to 3,500 from a short to medium term perspective. So at current level, keeping a stop loss below 2,400, one can go long, but buy on decline should be the strategy, or buy in a staggered manner. Looks very good for a portfolio stock rather than a trading bet. Immediate upside could be seen somewhere around 2,800 to 3,000, but as mentioned, positional target is intact at 3,500. That may take 6 to 8 months kind of time frame.
Okay, all right. BSC on your screen. It's right now trading with about flat, but with a positive bias as of now. But yes, let's move on and talk about another viewer query. We have Ajay who's been asking the view on NSC as a stock, NCC as a stock, and whether or not the stock, how does the near-term outlook look like for this particular counter? Nilesh, what's your view on NCC? I mean, the stock has already seen quite a bit of an underperformance so far this year, and in the past 1 month, it has further declined by about 8%.
Right, so far this year, the stock has corrected close to 40%, and in this month as well, we have seen a correction of 6%. The structure is not looking promising at present, and we may see further downtick to continue after a pullback. So there could be possibility of some bit of pullback from the current level because the counter has gone into extremely oversold territory. So use that pullback to exit from the long position if bought it from a trading perspective and short-term perspective. If somebody is looking from a longer term perspective, then one can stay put, keeping a stop loss below 150, because if it breaks 150, then it may slide further towards 130 to 125 as well. So watch out for that important level. But at present, there could be possibility of some bit of a respite and a pullback towards 170 to 175.
Okay, all right. 170 to 175 level could be seen for NCC. All right, let's move on and talk about another viewer query. We have Sameer Nayak who's been asking the view on DOMS Industries for a fresh investment horizon. Nilesh, what's your view? Because the stock has fairly been in consolidation mode around that 2,500 to 2,550 odd levels.
Absolutely, Lavisha. So, in fact, if you see last 1.5 year, the stock remained in a very tight range. On the upside, 3,000 has acted as a very strong barrier. At the same time, 2,400 from immediate perspective, followed by 2,200 from a broader structure perspective, that continues to act as a very strong support. As of now, there is no clear trend looking sideways, moving sideways, and looks like we may see this consolidation and time-wise correction to continue. So better wait for a breakout above 2,700. Then it's a good buy after 2,700 break above that, and then target will open up for 3,000 plus. But as of now, there is no clear trend, hence it's an avoid.
Okay, no clear trend, so it's an avoid for the time being. All right, let's move on and talk about another viewer query that is by Satya. He's asking the view on Godrej Consumer and if there is any target that you would advise as of now, and whether there is any need to shift to Tata Consumer products at the current price point. What's your advice, Nilesh, for this particular, and of course any FMCG stocks that you are bullish on?
Well, Godrej Consumer Product, it's a good bet to remain invested at current level because the counter has recently taken support at 1,100 and 1,080 kind of zone. And we are witnessing a gradual recovery in this particular stock. It has already surpassed its long-term 200 EMA, so we can expect a follow-up move on the upside to continue towards 1,250. So that's the immediate target one can eye for, followed by 1,300 to 1,350. That's again a position target. 1155 should be the stop loss for the long position. I would suggest to stay put in Godrej Consumer Products.
Okay, stay put for Godrej Consumer Products. Then let's move on, and we have another viewer query by Swatya. He's asking the view on, since First Source stock has not been going anywhere since a year, he's asking whether he should shift to Birlasoft. Nilesh, I know you mentioned that Birlasoft is something that you're bullish on, but any levels you would advise, and what should he do at this current price point?
Well, as mentioned, that Birlasoft is looking positive from a positional perspective, but since Nifty IT index is going through some bit of a consolidation as of now, so there could be possibility of some bit of consolidation in this particular stock. So important level to watch out for on the upside would be 460. If it breaks 460, then target on the upside will open up for 500 plus. And at present, if somebody is already holding the long position, can continue to stay invested, keeping a stop loss below 425. So that's the immediate support I can see on the chart. That should be the stop loss, and stay put is the advice.
Okay, all right. That's the view coming in for Birlasoft as well. Right, with that, let's move on with the next viewer query. We have Ajay, who's been asking the view on LIC as a stock and how does the stock look like from a near-term perspective. Of course, if you look at from the past 1 month, the stock has declined by about 1% itself. And if you look at the YTD, so far this year, the stock has declined by about 5%. And in the past 1 month also, the stock has not really moved anywhere. Nilesh, what's your view for LIC and how does the near-term outlook look like for this particular life insurer player?
Well, LIC has been witnessing consolidation and we have seen some bit of selling pressure at the high levels as well. So not able to sustain above 875, that's the immediate hurdle for this particular account, and also trading below is long-term 200-day moving average as well. So as of now, from a short-term trading perspective, not looking promising, but yes, it's a good portfolio stock keeping a time frame of 1 year plus. One can go long at current level as well as on declines as well. But on technical front, from a short-term trading perspective, it is important to take out 875 level on the upside, then probably go long for a momentum play towards 900 to 925. At present, if somebody is already invested in this counter, then keep a stop loss at 825.
Okay, all right. That's the view for LIC. Let's take another stock in focus. That is the Supreme Industries, given that they did receive an order. And on the back of that, the stock has been flat but with a positive bias. Now, they've received a letter of acceptance from BPCL for the supply of approximately 2 lakh to 10 kg composite LPG cylinders. However, the stock has seen a sharp fall from the highs itself. Nilesh, what's your view? The stock is fairly flat today. Can it fall further?
Well, Supreme Industries has been under pressure since a long time. Although today we are witnessing some bit of positive uptake in this counter, but overall the setup is not looking that promising. It has a very strong support. That's the only positive I can see on the chart. That's placed somewhere around 3,100 and 3,150. So that's a very strong support zone for this particular counter. Keeping that as a stop loss, one can remain long if already bought. For fresh entry, I would rather wait for a breakout above 3,400. If it breaks 3,400, then we can expect a strong pullback move towards 3,600 to 3,800. But as of now, since there is no clear trend, the structure is not looking attractive, avoid taking any fresh long position in this particular stock.
All right, avoid any fresh long position in Supreme Industries. Then let's move on and talk about another viewer query. We have Alex who's been asking the view on Castrol India on the current price point and for a short-term investment horizon. Of course, we've seen that the stock has been rallying and today also the stock is up by about 3.5% itself, given that Motion, which is your Stone Peak and CBP Investment Board, has launched an open offer to acquire about 26% stake in the company itself. But yes, Nilesh, coming to you, of course, last session we have seen that the stock has seen a jump of about 8%. Today it's up by about 4% itself. Can we expect further, a further positive trend to continue?
Right, Lavisha. So we have already seen a good price and volume breakout in the previous session. Today we are witnessing a follow-up on the upside. So structure looks positive. Yes, can be taken long position from a trading perspective for upside target of 204. That's the immediate target and immediate resistance as well of 200-day long-term moving average. But overall setup looks positive from a positional perspective. I believe it has a potential to cross 220, 225 levels on the upside as well. So yes, keeping a stop loss below 191, one can go long at current level.
Okay, go long at the current levels for Castrol India. All right, let's move on to our next viewer query. We have Sandeep who's been asking the view on Tata Power, NTPC and NTPC Green because all of these three counters have been down in his portfolio and he's asking which one is good for a long-term investment horizon. Nilesh, any thoughts on all of these three counters?
Well, out of all these three, Tata Power is better placed given the kind of a structure that we are witnessing. It has a very strong support at 370. So that's one particular counter out of these three that is looking positive, and we can expect a gradual up move, but not from a trading perspective. It's a long-term bet. One can stay invested in this particular counter from a longer-term perspective. It has a potential to cross 400 plus kind of levels going forward. But as far as NTPC and NTPC Green is concerned, both the stocks are looking more sort of a sideways as of now. NTPC has a strong support at 300 and resistance at 340, so watch out for that. Whereas NTPC Green, that has gone into extremely oversold territory, so we may see a pullback move towards 100 plus. Keeping a stop loss below 90, one can remain long in NTPC Green as well.
Okay, all right. That's the view for the entire energy basket as of now. But yes, let's move on to our next viewer query. We have Naveen who's been asking the view on Shriram Finance on how does it look like on the technical perspective. And Nilesh, how does the counter look like? Today the stock is down, but we've seen that the Japanese bank investment of about 20% stake in the company has given quite a bit of a rally in the counter.
Well, Lavisha, if you see in last couple of trading session, we have seen a good momentum across all NBFC counters, be it Shriram Finance, L&T Finance Holding, and also Chola Finance. So these are the few names where we have already seen a good momentum. Even in gold finance companies like Muthoot, Manappuram, we have seen a good momentum. As far as Shriram Finance is concerned, we have seen a new record high in the previous session. The structure is looking strong for 1,000 plus kind of level from a short-term perspective, keeping a stop loss below 935. If at all you get any dip, that can be used as a buying opportunity. Not advisable to chase at the high level since the risk and reward is not looking favorable at present. So better wait for some bit of a decline to use as a buying opportunity, and upside can be seen towards 1,000 plus.
Okay, all right. So some decline could be expected, and risk reward is not favorable at the current price point for Shriram Finance. All right. Let's move on to our next view query. We have Shweta Naidu is asking the view on PNB housing and whether it's a good price point to hold at the current market price. What's your view, PNB housing? I mean, in the past 1 month, we've seen that the stock has seen about a 5% rally, Nilesh.
Absolutely. So the structure has already turned positive. We have seen a good price and volume breakout in the previous session, where we have seen good build up on the long side as well. So we can expect a move towards 1,025 on the upside. Stay put in PNB Housing Finance, keeping a stop loss below 930. The structure looks positive.
All right, the structure looks positive for this particular counter. Then let's move on and talk about another viewer query. We have RP who's been asking the view on FMCG counters and particularly for HUL since it has been an underperformer. Nilesh, what's your view for HUL? Anything that you're watching out for in the near term horizon?
Our call is that you should avoid FMCG for the time being. The structure is not looking that great across all FMCG names like HUL, Dabur, Nestle. In fact, these are the stocks where we have seen continuous decline in last few sessions. In fact, a couple of weeks now, it has been underperforming. So HUL, if you see on the chart, the immediate support is placed at 2250. If it breaks below the same, then we can expect further downtick towards 2000 as well. So avoid taking any contra bet from a trading perspective. As of now, the structure is not looking promising.
Okay, all right. That's the view coming in from the FMCG basket. But yes, let's talk about Eternal and Swiggy shares itself because both of them have been under pressure given that the delivery workers have called an all India strike on December 25th, which was yesterday, and on December 31st itself. But yes, coming to you, Nilesh, for both of these counters, some selling pressure today, but what can we expect from a near-term horizon?
See, from a short-term perspective, structure looks slightly on a weaker side. As far as Swiggy is concerned, we may see further downtick towards 385 to 380. 380 is a very strong support. If it breaks below the same, then we can expect a further breakdown towards 360 to 350 as well. But watch out for 380 level on immediate basis. On the upside, if it breaks above 410, then it's a buy. But at present, it's an avoid. There is no clear move on the upside, so it's better to avoid taking any contra bet. Eternal, in fact, comparatively better place, and it has a very strong support at 275. Keeping that as a stop loss, a pullback trade can be seen towards 295 to 300.
Okay, all right. That's the view coming in for both the food delivery counters as of now. But yes, let's take another viewer query on that note. We have RJ who's been asking the view on Asian Granito because he's been holding it from the last 5 years and whether it's a good time to accumulate or exit at the current price point. Nilesh, what's your view? I mean, the stock recently hit its 52-week high. Can the rally extend? Because today the stock is seeing a bit of a cool off, 2% decline.
Are you talking about Asian Tiles, which is trading somewhere around 76.5?
Yes, Asian Granito, 76.5. That's right.
Right. So we have already seen a good momentum in this particular counter recently. The stock moved from 60 to 77 levels in a very quick time. So given that kind of momentum, there could be possibility that we may see momentum to continue towards 82 to 85. Although today we are witnessing some bit of profit taking, But I don't see any major correction on immediate basis. If at all you get any further dip towards 75 to 74, that can be used as a buying opportunity, keeping a stop loss below 71, and upside can extend towards 80 to 85.
Okay, 80 to 85. All right, just one last question before we let you go, Nilesh. I know we discussed a range of stocks, but what are your top picks at this hour?
Right, Lavisha. So we spoke about defense names, PSU stocks, and railway names ahead of the budget. So pre-budget rally move has already started across all railway counters. So our preferred bet we have already discussed about RBNL, which is up 7% today. So we are still bullish on this particular counter for 380 to 385 on the upside on immediate basis. So keeping a stop loss below 355, although the risk and reward is not looking attractive at current level, so better wait for some bit of decline. Then it can be bought. Another stock that we discussed about Titaga Wagon, where we have seen a good breakout. So this counter can be added at current level, and positional target comes somewhere around 920 to 950. Keeping a stop loss below 855, Titaga Wagon is a buy. And from the defense names, Mazgaon Dock is something that is looking positive for a pullback move towards 2700. Keeping a stop loss below 2540, Mazgaon Dock can be bought. So across all defense, railway, PSU stocks, we are witnessing a good momentum. We believe that this momentum is likely to continue.
Okay, all right. Railway and defense is something that you're bullish on. All right, Nilesh, on that thought, we have to let you go, but thank you so much for your time and wishing you the best of festivities and a very happy new year once again.
Thank you, Lavisha. Wish you the same.
Thank you. Right, before we move on to our next guest of the show, let's